If a bar auditor walked into your office tomorrow and asked for one report, this would be it, the three-way reconciliation. Let's go to your IOLTA account register. It is the single most important compliance check in the trust accounting. And in almost every state, in every country, you're required to do this, usually every single month. And here is the problem. Most attorneys have never done correctly. They reconcile their bank account, see it matches, and think they're fine, but they're not. A bank reconciliation only proves two things agree. A three-way reconciliation proves three things agree. And that third leg is exactly where trust accounting goes wrong. Over the last few videos, we set up the chart of accounts, recorded Sarah's retainer, transferred earned fees, and paid a court filing fee from trust. Every one of those touched her IOLTA balance. Today, we prove all of it ties out to the penny. So let's get into it. Let's keep this simple. Three numbers must match exactly. Leg 1, your IOLTA bank statement balance, what the bank says is in the trust account adjusted for anything outstanding. Leg 2, your book balance in QuickBooks, the balance of the 1200 IOLTA account ledger, which should equal to your fund held in trust liability for Sarah Martinez or for all the clients. Every pound in trust is a pound you owe to the client. So the asset and the liability are the same number, the sum of every individual client ledger. Add up what each client is holding, and the total has to match too. In our demo, we have one client, Sarah Martinez. So her ledger is the total. In your real file, you add up every client. Either way, all three legs must land on the same number. For us, that number is 900. So let's prove it. This is a sample bank statement for trust account. And here is our August bank statement from the trust account with the beginning balance. Notice the closing balance 900. Now into QuickBooks, let's reconcile this. If we reconcile, click on reconcile, the beginning balance is 0. If you recall, we have set up the ending balance for August 31st, 2025 is 900. Then we started reconciling. QBO lists every transactions, match each one to the statement. The 2000 transfer, the 350 court filing fee, the 1700, 1750 earned fee transfer on the 25th, and all are checked. Now, watch the difference field in the top right. The difference is 0, and your goal is 0 too. When it hits 0, leg 1 and leg 2 agree. The bank statement matches your QuickBooks Online balance. Click Finish Now. Done. If you cannot get to 0, stop there. Do not force it with a fake adjustment. In trust accounting, a plug entry is how small bookkeeping error becomes a bar compliant. We'll cover finding the breaks shortly. Now let's go to the report. Balance sheet. Let's click on all dates. Here is a check almost nobody does, and it catches the most dangerous errors. We're in balance sheet now. For two numbers, IOLTA account and fund held in trust, both are showing the same number, 900. And these two must be identical, and ours are. Think about why. Every pound in trust bank account belongs to a client. It is not your money, it is a liability. Money you owe back. So the asset and the liability are two sides of the same coin. If the IOLTA account showed 900 but fund held in trust showed, for example, 650, you would have a 250 problem. Usually a transfer that hit the bank but was never categorized to a client's sub-account. When these two match, your books are internally consistent. Now let's go to the balance sheet detail report. Now the third leg. What separates a real trust reconciliation from a regular bank reconciliation? You need every client and exactly how much you are holding for each as of August 31st. Expand the fund held in trust, Sarah Martinez. Each client shows a sub-account under the fund held in trust. And here is Sarah Martinez's balance. That's 900. Add up every client sub-account. In our demo, there is only Sarah, so the total is 900. In your real file, there is where you sum all of them. The grand total is the leg 3. And here is the rule that protects you. No individual client ledger can ever go negative, not even for a day. A negative client balance means you spent one client's money on another client's matter. That's common thing. The violation auditors look for the first. Sarah's ledger went 5,000, then 3,000 to 650, then 900. Never negative, and it's clean. This is the moment of truth. Line up all three. Leg 1, bank statement closing balance 900. Leg 2, QuickBooks IOLTA balance and fund held in trust 900. The total of all client ledgers, which for us is Sarah Martinez only, that's 900. Three legs, one number, they tie it out. This is the report you would hand an auditor. It proves you are holding exactly what your clients are owed, no more, no less, and never mixed with your own money. My recommendation here is export all three reports to PDF every month and keep them in a dated folder alongside the bank statement. If you're ever audited, you don't scramble. You just open the folder. That's it. Now you know how to do a proper three-way reconciliation in QuickBooks Online. Leg 1, reconcile the IOLTA account to the bank statement. Leg 2, confirm your IOLTA balance matches fund held in trust. And leg 3, add up every client ledger. All three match. You are compliant. They don't. If you find any break, then you can fix it before an auditor does. This is video 6, and in a way, it is the one everything else was building toward. The chart of accounts, the retainer, the earned fee transfer, the court filing fee, they all exist. So this reconciliation ties out clean every month. Links to all of them are in description. If you run this and the number won't match, that's exactly the kind of mess we fix every day. Visit legalbookkeeping.online or connect with us on LinkedIn and we'll help you get it clean. Subscribe for weekly tutorials on legal bookkeeping and IOLTA compliance. Thanks for watching and stay compliant.